Something changed in Canada 1 month ago that every senior receiving CPP, OAS, or GIS needs to understand right now, and almost no one in the mainstream media covered it. On March 26, 2026, a new law came into force that fundamentally changed how every bank, credit union, and financial institution in this country monitors your cash. If you have savings at home, if you are planning to make a large deposit, if a family member has ever helped you deposit money, or if you simply want to make sure your pension income is protected and your account is never frozen without warning, this conversation is for you. By the time we are done, you will know exactly what the new rules are, the precise April 2026 amounts for CPP, OAS, and GIS, and 8 specific steps you can take today to protect yourself and every dollar you have earned. Let us begin with the law, because understanding what changed is the foundation of everything else. On March 26, 2026, the federal government signed Bill C-12 into law. The legislation's official name is the Strengthening Canada's Immigration System and Borders Act. Most of the coverage focused on the immigration provisions inside it. But buried deep within this omnibus legislation is a sweeping rewrite of Canada's Proceeds of Crime, Money Laundering, and Terrorist Financing Act. The law that governs how every bank, credit union, insurance company, and mortgage broker in Canada must monitor and report cash transactions made by their customers. Every Canadian with a bank account is affected by this change, and the effect on seniors receiving federal pension benefits is particularly important to understand. Here is what changed in plain language. The first and most significant change involves financial penalties. Under the previous rules, the largest fine that FINTRAC, Canada's financial intelligence regulator, had ever imposed on a Canadian bank was under $10 million. Under the new rules now in effect, a single prescribed violation can result in a fine of up to $4 million for an individual and up to $20 million for a financial institution. When multiple violations are combined, the cap rises to $20 million or 3% of a bank's total global revenue, whichever is higher. For Canada's largest banks, 3% of global revenue is not a number measured in millions. It is a number measured in billions. What this means for you practically is that your bank's compliance software has been upgraded, its staff have been retrained, and the institutional cost of not flagging something that looks unusual has never been higher. Banks will now err on the side of reporting every single time. They have no other choice when the alternative is a billion-dollar penalty. The second change is that all financial institutions, banks, credit unions, insurance companies, mortgage brokers, must now formally enroll with FINTRAC and renew that enrollment on a regular basis. The reach of FINTRAC's oversight across the Canadian financial system is now broader than it has ever been. The third change involves how cash itself is treated. The new law is preparing the groundwork for a prohibition on any business or charity accepting cash payments of $10,000 or more. Banks are simultaneously moving toward prohibiting third-party cash deposits, meaning a family member depositing cash into your account on your behalf at a bank branch. The specific final regulations are still being developed, but the direction of travel is clear. Cash is becoming more restricted, more monitored, and more scrutinized in Canada with every passing month of 2026. To be absolutely clear, this law is not targeting seniors. The government is not watching your pension income. But the automated systems that monitor cash activity at Canadian banks are now more sensitive and more aggressive than they have ever been. And understanding how to navigate them safely protects you from delays, account holds, and unnecessary stress that can arise even when you have done absolutely nothing wrong. Let us walk through the specific cash rules that are in effect right now. Any single cash transaction of $10,000 or more must be automatically reported by your bank to FINTRAC within 15 calendar days. This is called a large cash transaction report. Your bank does not need to notify you before filing it. They do not need your consent. The report is filed automatically every time without exception. Here's the part where many Canadians make a serious mistake. Believing they can avoid triggering a report by keeping each individual transaction just below $10,000, withdrawing $9,500, depositing $9,800, they assume no report is filed. That assumption is not just incorrect. Acting on it is a criminal offense under Canadian law. Deliberately breaking up transactions to avoid the $10,000 reporting threshold is called structuring. It is illegal regardless of whether every dollar of the money involved is completely legitimate. It does not matter that the money came from your pension. It does not matter that you saved it over decades of honest work. Structuring is a criminal offense. Full stop. No exceptions. There is also the 24-hour aggregation rule. If you make 2 or more separate cash transactions that together total $10,000 or more within any single 24-hour period, FINTRAC treats all of those transactions as one combined transaction, and a report is filed automatically. 2 deposits of $5,500 made on the same day equal $11,000 in FINTRAC's system. The report is filed without any additional decision being made by bank staff. The software does it. And under the new provisions of Bill C-12, banks are moving toward refusing third-party cash deposits entirely. If your son or daughter attempts to deposit cash into your account on your behalf at a bank branch, the bank may now refuse that transaction outright and flag the attempt. A significant number of Canadian seniors are completely unaware that this practice is being discontinued. Now let us address the direct question. What actually happens if you have $20,000 in cash right now? Holding cash is entirely legal in Canada. There is no law that prevents you from having $20,000, $50,000, or $100,000 in physical Canadian currency in your home, in a safe, or in a safety deposit box. You are fully within your rights to save in cash. But the moment you attempt to deposit a significant sum of that cash into a Canadian bank in 2026, you will face scrutiny that is now backed by consequences serious enough that no bank compliance officer will leave an unexplained large cash deposit unexamined. Consider how this plays out for a typical senior. Someone receiving average CPP of $925.35 per month and OAS of $743.05 has been setting aside a couple $100 in cash each month from their pension for 2 years. They have accumulated approximately $20,000. They decide it is time to deposit it. They walk into the bank with $20,000 in cash. The teller pulls up their account, a steady monthly direct deposit from Service Canada, modest regular spending, and no significant prior cash activity, and there is suddenly $20,000 in cash on the counter. This is a significant anomaly in the account's financial profile. Under the new 2026 rules, the teller has no discretion. The transaction is escalated. A FINTRAC report is filed. The account may be held for review while compliance officers assess the source of the funds. The senior has done nothing wrong. But the disruption, the hold on their funds, the paperwork, the calls, the waiting, is entirely real. For a senior depending on those funds to pay rent or purchase medication, the delay is not merely inconvenient. It is a genuine hardship. Protecting yourself from this situation is not complicated. It requires only preparation and awareness, both of which you will have by the end of this conversation. 3 real situations show how this plays out in practice and what determines whether a review takes 2 days or 2 weeks. A 71-year-old woman had been setting aside $300 to $400 in cash each month for 3 years, saving graduation gifts for each of her 3 grandchildren. By March 2026, she had accumulated $14,000 in cash at home. When her eldest grandchild graduated in April, she went to her bank to deposit the $14,000 and write a check. The teller immediately called the branch manager. The account was flagged. A hold was placed on the funds. She received a letter asking her to explain the source of the money within 7 business days. She had no organized paper trail, no withdrawal records sorted by date, no written log of how she had accumulated the money over 3 years. She spent 4 stressful days gathering old bank statements and explaining her situation by phone to a compliance officer. After 9 business days, nearly 2 full weeks, the hold was lifted and the deposit cleared. She had done absolutely nothing wrong, but she said afterward that if someone had simply told her to keep a basic notebook from the beginning, she would have saved herself weeks of anxiety. No one had warned her. A 77-year-old man receives full OAS at the enhanced rate of $817.36 per month, the rate for seniors 75 and older, along with CPP and GIS, for a combined monthly federal income of approximately $2,567. When his wife passed away in January 2026, he inherited $28,000 from her separately maintained credit union account. After the estate was settled in March, he transferred the funds into his main checking account. Because the amount was large and unusual for his profile, the credit union voluntarily filed a suspicious transaction report. He received a call from the compliance department asking about the transaction. Because his lawyer had specifically advised him to keep organized records, his wife's will, the estate certificate, and a letter from the estate lawyer all in a single folder, the compliance review was completed in 3 business days. His account was never frozen. His CPP, OAS, and GIS continued without any interruption. The lesson he took from the experience was that his lawyer told him to keep every piece of paper, and he had thought that advice was excessive at the time. Those papers turned out to be the most valuable thing in the folder. A 69-year-old woman living in Saskatoon receives CPP, full OAS, and GIS, a combined monthly federal income of just over $2,500, enough to cover rent, groceries, and her basic medications. In February 2026, she received a phone call from a man who identified himself as a CRA enforcement officer. He told her she owed $11,000 in back taxes, that a warrant had been issued for her arrest, and that the only way to stop it was to immediately withdraw $11,000 in cash and send it to a specific address. She went to her bank the next morning to make the withdrawal. The teller noticed she seemed distressed. She was trembling and asked twice whether the withdrawal could be processed immediately. The teller gently asked whether everything was all right. She began to cry. The branch manager was called. They sat with her, explained clearly that the CRA never demands cash payments over the phone, called her daughter, and filed a report with the Canadian Anti-Fraud Centre at 1-888-49-58501. Every dollar of her money was protected. The banking compliance systems that can feel like an inconvenience when you are depositing legitimate savings are the exact same systems that protected her from losing a full month of pension income to a criminal. The rules of 2026 are not your enemy. In situations like this one, they are the most powerful protection you have. Now let us go through the exact April 2026 benefit amounts confirmed from official Government of Canada sources. Canada Pension Plan increased by 2% effective January 1st, 2026, and that rate holds through December. The maximum CPP retirement pension for someone who began benefits at age 65 is $1,575 per month. Very few Canadians receive the maximum. It requires 39 years of contributions at the maximum pensionable earnings level throughout a working career. The average CPP payment for new beneficiaries in the April to June 2026 quarter is $925.35 per month. Your own CPP amount reflects how much and how long you contributed. Starting before age 65 permanently reduces your payment by 0.6% per month before your 65th birthday. Starting after 65 increases it by 0.7% per month up to a maximum gain of 42% at age 70. Old Age Security, the April 2026 quarterly review, produced a 0.1% increase, bringing the total annual increase from April 2025 to April 2026 to 2.1%. The maximum monthly OAS pension for the April to June 2026 quarter is $743.05 for seniors aged 65 to 74. For seniors aged 75 and older, the maximum is $817.36 per month. The higher amount for those 75 and over reflects the permanent 10% enhancement introduced in July 2022. OAS never decreases. If the consumer price index falls, your OAS payment holds at its current level. It can only rise or stay flat. The OAS clawback begins when your net world income exceeds $95,323 in 2026. For every dollar above that threshold, 15 cents is recovered from your OAS through your income tax return. For seniors aged 65 to 74, OAS is fully eliminated when income reaches $154,530. For seniors 75 and older, the full elimination threshold is $160,696, guaranteed income supplement. The maximum monthly GIS for a single senior in the April to June 2026 quarter is $1,985 on top of OAS. GIS is entirely non-taxable. A single low-income senior receiving full OAS and maximum GIS receives a combined $2,728.05 every month before any CPP. GIS eligibility is recalculated every July based on your previous year's tax return. If you do not file your 2025 income tax return by April 30th, your GIS payments can be suspended starting in July until Service Canada receives your income information. Call the CRA at 1-800-959-8281 or visit Canada.ca to find a free tax clinic near you. That deadline is 2 days away. Here are your 8 steps in plain language. 1. Know the $10,000 threshold and respect it. Any single cash transaction of $10,000 or more is automatically reported to FINTRAC. 2 or more cash transactions totaling $10,000 or more within 24 hours are treated as one combined transaction and also reported. Plan your banking activity honestly, never with any intention of avoiding a report. 2. Never structure your transactions. Deliberately breaking up deposits or withdrawals to stay below the reporting threshold is called structuring, and it is a criminal offense under Canadian law, regardless of whether the money is entirely legitimate. 3. Keep a simple cash log starting today. Get a notebook. Every time you set aside cash, write the date, the amount, and where it came from. Your pension, a birthday gift, proceeds from selling something. A handwritten record creates the paper trail that protects you if your bank ever asks questions. 4. Organize your supporting documents before any large deposit. For inherited money, have the will and estate certificate ready. For sale proceeds, have the sale agreement. For accumulated savings, have bank withdrawal records sorted by date. Put everything in a folder before you go to the bank. 5. Call your bank before making any large cash deposit. This is the single most effective step you can take. Phone your branch and say, "I am planning to deposit approximately this amount in cash on this date. It came from this source. I have documentation ready." This one call can reduce a 2-week compliance review to 2 or 3 days. Banks treat proactive, prepared customers very differently from unexpected large cash deposits. 6. File your 2025 tax return before April 30th. Your July 2026 GIS depends directly on it. File even if you have zero income. File even if you owe nothing. Call 1-800-959-8281 or find a free community tax clinic through the Community Volunteer Income Tax Program at Canada.ca. 7. Update your direct deposit information with Service Canada. If your banking details changed in the past year, log into your My Service Canada account at Canada.ca or call 1-800-277-9914. A mismatch in your banking details can cause your CPP, OAS, and GIS to be delayed or returned, particularly during the July benefit recalculation period. 8. Know how to protect yourself from financial fraud targeting seniors. The CRA will never call demanding cash. The RCMP will never demand gift cards. If anyone by phone, email, or in person asks you to withdraw large amounts of cash or transfer money electronically, stop immediately. Call someone you trust and contact the Canadian Anti-Fraud Centre at 1-888-495-8501. April 2026 is genuinely different from any year that came before it. Bill C-12 became law 1 month ago. Banks are actively upgrading their systems right now. The penalties for institutional non-compliance have never been higher. And at the same time, your benefits are at their highest dollar values in Canadian history. A single senior receiving CPP, OAS, and GIS can receive close to $3,000 per month in federal support. You have earned every dollar of it. The people who protect those benefits are the ones who understand the rules before they need them, not after. Leave your question in the comments below. Every comment is read and responses are given. If this conversation gave you something useful, please share it with a senior in your life who deserves this information before they ever need it. Subscribe and turn on notifications. When the rules change, when benefit amounts are updated, and when anything emerges that affects your income or your banking, you will hear about it here first in straightforward language with the real numbers. This is Wealth Years Canada.